Yo, what is going on, YouTube? Quick video today. My crypto outlook for the next few weeks. I think that, in my opinion, nothing's really going to happen until that September announcement comes. Whether we don't get rate cuts, whether we do get rate cuts, but I'm extremely optimistic. I believe we get rate cuts in September. I think we get multiple rate cuts quarter 4 of this year. And I think we do run until, early 2026. But in this quick video, I'm going to break down what I believe is happening in crypto. And the first thing I want to start off with is don't freak out. As you guys can see from the side of my screen, we are looking a little bit red. Obviously, for those of you guys that do not know, Mr. Kanye West launched a meme coin about a few hours ago, and it's doing extremely well. Now, what typically happens when meme coins come out with such hype, with such a big name, is we see money get extracted from, solid projects. We saw this with the Melania situation and the Trump coin situation early 2025, where a lot of money was extracted from these projects and dumped into those coins, which they haven't really done much since the beginning of 2025. Now, if you guys notice, a lot of red is happening right now. I believe we do recover. Nothing to be concerned about. Nothing to be, scared about. Now, when we are looking at Bitcoin, I like to look at the bigger time frame. Again, I know for a lot of you guys that follow me on social media, you guys see that I day trade a lot of the S&P 500, a lot of stocks. But when it comes to crypto, I like to basically look at bigger time frames because I'm not intending to day trade it. I'm not intending to be in it short term. I'm intending to be in these projects long term, especially the ones that I truly believe in. But as you guys can see, whenever I'm looking at my charts, I'm always looking at something called imbalances. Now, I'm not going to go too much in depth and confuse the hell out of you because a lot of you guys probably don't even know what an imbalance is. But I look at where institutions have resting liquidity and resting open orders in the market. And these little green boxes, also known as fair value gaps, are imbalances, and they play like a magnet to attract price. Now, what we see here is we do see us, Bitcoin specifically, I'm talking about, that's what I mean by us. We see Bitcoin on a downtrend. It's very easy. The most, I don't want to sound rude, but the most stupidest person in the world can understand we are going down. This looks like a downward staircase. Now, where I believe that we're going down is we're going to go down here at these lower lows. We're going to take the liquidity from here. Then we're going to drive down and take the liquidity from here and then bounce back up. Now, why? Because I always teach the people that this simple analogy was taught to me early when I got into crypto and when I started taking day trading serious. You don't want to think like a retail investor. You want to think like an institutional investor or a day trader. You don't want to buy when things are hella expensive, meaning going up in value, meaning worth more. You want to buy when things are going down, when things are cheaper, when things are on quote unquote sale. Now, you also want to think about like this, guys. Institutions are here to manipulate the market. Institutions are here to basically shake out people that have no fucking idea what they're doing with crypto. And they have no idea how to make money in crypto. Now, most people get the whole thing wrong, and they buy when it's at its high, when it's at a higher high, when everything is booming, when people are talking about it. What you want to do is you want to think like an institution. You want to think like smart money. And you want to be buying when no one's talking about it and selling when everybody's freaking going wild about it. So as you guys can see here, we are approaching a downtrend. We are creating fair value gaps. Now in the short term with fair value gaps, price typically likes to breaks through it. It does a small little retest and then it drops down or goes the direction the trend is at. So you guys can see here, we literally did it here, right? Price. We were consolidating. We had a break of market structure here. We shot up, consolidated again. Institutions in smartly putting their positions in. Then what happened after that? We had a break of market structure, and then boom, we had a retest. I actually want to zoom in. So actually, I want to teach you guys what I look at in the market and what has helped me a lot. We had a sharp move up. There was a space between this candle and this candle, giving us a fair value gap or an imbalance. Price gives us a small little retest, and then it goes in the same direction. We are literally seeing that form right over here. We're on a downtrend. Price creates a fair value gap. What happens? We retest it, and then boom, we go in the same direction. Again, we're gonna take the liquidity here, and we're gonna take the liquidity here. I do see us experiencing that. Now, if you go on XRP, it's the exact same thing. What are we on? We are on a downtrend. Now, there is an imbalance or a fair value gap here. Again, what happens when we create a fair value gap? And I can't even make this up if I even wanted to and lie to you guys. And I'm not even selling a course. I'm not a part of anything. I'm just spitting free information. What happens? We have a consolidation phase here. Consolidating. Boom. We have a break of market structure. We shoot all the way up. And you guys can even see from any fair value gap we create right here. Retest, shoot up. Explode up, retest, continuation. Same thing here. We have a continuation, break of market structure, retest, right back to the fair value gap, and then shoot back up. Because the fair value gap is almost like a confirmation of direction is going to keep going that way. But eventually we have to come back because institutions have open pending orders known as imbalances to collect that liquidity, collect their money and go back up to the upside. Because why? Institutions want to buy cheap. They don't want to buy expensive. So I do see us coming back down here and, gathering and closing these imbalances here. In my opinion, if we don't hold these lower lows here, we will break the lows and come back to this area, which is the $2.70 area. And then if we're not able to hold this liquidity pocket area, we will come down to basically collect this fair value gap here and this one right over here. I think the low that we go for XRP is $2.50. Now, this doesn't mean I'm bearish for crypto as a whole. I think altcoin season is done. This just means that we have a small correction to a big move up. It's normal, guys. It happens. Do not freak out. It's not something that you should be concerned about. I'm heavily still dollar cost averaging because I know September we will get a rate cut, which leads me to the big charts that I like to look at. Bitcoin dominance. Now, if you look at Bitcoin dominance, we are going down. We are in accumulating phase. We are in the loading season, the loading phases, and this is where you want to be buying the most. Because again, I'll show you guys right now in a bit. But what happened April, May of 2025? We had the big scare where basically World War III was potentially about to happen. And after that, we had coins rally up crazy. And I'm going to show you Ethereum in shortly. But you guys can see that so far, we're respecting this trend line on the monthly chart on Bitcoin dominance. If you guys haven't watched my last video, I think 2 videos ago where I talk about crypto, I talk about what Bitcoin dominance is. I'm not going to get too much in depth with it, so I don't want to confuse you guys, but this is a massive indicator that I'm using chart-wise to see when I need to take my money out and when I should stop dollar cost averaging. So that's Bitcoin dominance. And then of course, Ethereum, Bitcoin chart. I want to show you guys before I show you guys this, but you guys can see that we are looking really good for Bitcoin and Ethereum Bitcoin chart. So this chart specifically just shows us the value from Bitcoin to Ethereum. For those of you guys that do not know, most of you guys should know, in order for us to have an alt season, Ethereum needs to run parabolically. We do have some liquidity pockets here that need to be basically gathered by institutions. So we are looking to go higher. And again, what did I mention? We have a consolidating phase, fair value gap right here. Sorry, money is sitting here. What happens? We have a retest, and we're going to shoot back up, and we're going to take the liquidity here, take the liquidity here, take the liquidity here. But eventually, guys, when altcoin season peaks, we will come back down to gather the liquidity here. I promise you guys. And we're going to go sideways for maybe a few years, maybe a few months. I think like 2 years, 3 years. Like we just had the last cycle, and then going into 2028, we'll have the next run up where we'll have another crypto alt run and crypto cycle and whatnot. And then in terms of Ethereum as well. Now, if we go on the 4 hour with Ethereum, I believe that we have the same type of thing. Whenever you're looking at charts, guys, you also want to look at market structure. That's what I like to look at a lot. Are we creating lower highs and lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, or are we going sideways? And obviously right here, it's very simple to tell we are going down, guys. And again, what did we create here? A fair value gap on the 4 hour. And likely we're going to test this, come back here, gather this liquidity here, come back down here. Again, we have liquidity here. If we don't hold these higher highs, I believe we drop down sub 4,000 to 3,900, which kind of gives us that kickoff going into rate cuts, and we shoot up to positive 4,000, going to 5 grand, etc., etc. So we are in a good spot, guys. Like right now, again, I want to emphasize that I know you guys see red right here on my screen. Don't be scared. Don't be fearful. This is a great opportunity. Now, if you have money, if you're getting paid from your job, make sure you buy crypto. Make sure you are investing in assets that you believe in. And as well, make sure you're buying coins that haven't really ran yet or are having pullbacks. I'll give you, three projects right now that I really like, that I'm really invested into them heavily. I like them based on their tokenomics. I'm not going to get in depth what that means. It's not important because I don't want to confuse you. Utility, and then of course, just overall market structure. Whenever it comes to cryptos, the reason why I was able to catch XRP. Let me go on the monthly. I'm going to go on the monthly so I don't, keep you guys here forever. But the reason why I was able to catch a XRP here was because I was smart enough to realize that whenever we're going sideways, it's institutions putting their positions in slowly and slowly and slowly. One of the biggest problems that institutions have is they have a lot of money, and they can't be putting in their full position right away. They can't be putting in their full entries in one hit. Why? Because they're going to cause candles like this, and their job, brokers' jobs, the institution's jobs, it's not for you and me to make money. It's for us to lose money. It's for us to be exit liquidity. And you know how many people at this point said, fuck XRP, I'm not investing in it. And out of nowhere, November, we fucking go parabolic. And then January comes and we go even more parabolic. We have a 400% gain. This is where I made my first $10,000 in crypto. In general, with any investment, I was able to extract a majority of that profit and diversify it amongst different coins because I saw the same trend in the same pattern. So some of the projects that I'm actively looking at right now is Cardano. If you guys notice Cardano, what are we doing? We're moving sideways action. Again, institutions gathering their positions, and I believe we're going to fly very soon. Again, this is not financial advice. Make sure you guys do your own research, but this is what I'm seeing with 88. Now, is this my target for 88 as a whole? No, because for me, my strategy is very simple. I don't look at specific prices. I look more so as what's Bitcoin dominance doing, what is Ethereum Bitcoin chart doing, what is the total two market cap doing, what is Google Trends, what is Twitter Trends, what is the Google searches. Look at my previous video where I talk about crypto and my exit plan, so you guys can kind of know a bit. I'm not really looking at numbers on a specific coin because I know the market's going to go up, but I have indications of what specifically I'm looking for outside of a physical coin's value. Because if I value my exit on a coin's overall value, what if I'm looking at, for example, Chainlink, giving you guys a realistic example. I believe Chainlink is going to go between $180 to $250 per coin this cycle. It's a very, 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 very undervalued, in my opinion. I think a lot of people are underlooking it. But if Chainlink, for example, is at $175 per coin USD, which is like two something Canadian, it's almost $300 Canadian, and I see Bitcoin dominance below 45%. I see Ethereum Bitcoin chart outpacing Bitcoin massively. I see the total two market cap booming. I see us trending on X. I see us trending on Google in terms of high Google searches. And I see the Coinbase app as a top 4, top 3, top 2, top 1 downloaded app on the App Store. I'm taking profit because I'm looking at those little things, not really dollar value. So Cardano is a good one that I really like. I also like Ondo Finance. I think Ondo Finance is extremely solid. As you guys can see here, we're just moving sideways. Nothing is really happening. And this is the exact same trend that I saw with XRP before it shot up. Jasmine coin is another one that I'm looking at that could has, monumental potential. If you guys even think about it, Jasmine coin right now is a penny. Jasmine coin for Jasmine coin to do what XRP did, we're looking at basically, think of it like this. It'll have to go to 10 cents. Jasmine's very likely, in my opinion, to go higher than that, right? If you even look at it from a 30 cents perspective, that's a 1,700% gain. Do the math on that, guys. You have $1,000 in there, you have 2,000, a couple $100 in there. Like, this is where you can make life-changing money, guys. And imagine you do that with 6 or 7 different other coins. So Cardano, Ondo, 8A is another one that I'm really looking at. Also Sui, right? Even Sui had its big run here over the last few months from, I would say, December of last year to basically now. We've just been ranging, we've just been choppy. Yes, we created highs here of $5.32 in January. What crypto did not, but as of now, we're down a significant amount. This is a great opportunity for you to stack your Sui back. Sui is one of my biggest holdings. Sui is a project that I think is going to do extremely well as well. Even if you look at H-bar as well. H-bar, we have an imbalance that needs to get filled out. Let me go on the 4-hour, right? Let's go on the 4-hour. Same concept as well. Same concept as well. We are what? We're on a downtrend. We have an imbalance that needs to get filled here. We have liquidity. Institutions want to come back and gather their money and buy cheap. What do? We're creating a fair value gap right here. And likely we're going to come back down to these areas between 22 cents to 20 cents and then shoot back up. Again, H-bar is at a great price point in my opinion. Even though, yes, we did have a run up, we've been ranging from 16 cents to 30 cents. These wicks, I don't really count because it comes back down rapidly, but from like basically December, let's call it January, from January to now, we've just been going sideways, like very sideways. So that's kind of my thing, guys. And then one last tip, I'm gonna say this to you. I say this to everyone that I work with one-on-one, is you don't want to diversify to 50 bajillion coins. You want to have your conviction plays. You want to have the projects that you really believe in and invest in them, guys. It's better, in my opinion, to have $5,000 and have $1,000 in 5 different coins than you to have 25 coins and have $500 or have $200 and have a few $100 and multiple coins, because you're gonna ruin your overall multiple gain, in my humble opinion. But again, it's just my opinion. What do I know? I just out-predicted a multimillionaire in my previous MLM. So, I mean, I don't know my stuff, but I might not have the results that these people have yet, but I know my shit really well. And again, you always want to remember that just because someone makes a lot of money does not mean you need to blindly follow them. Follow people that know what they're talking about, that have proven success, not just themselves, but through other people. And I have that. Go on my Instagram, you guys can see it. But hopefully, guys, this video brought you some value. Do not freak out. Buy the dip. If you guys get paid, make sure you buy crypto. Make sure you invest in yourself. The dollar is depreciating in value. And life's only going to get harder for those that don't invest. So hopefully, guys, y'all like this video. Make sure you like, comment, and subscribe. And I'll see you guys in the next one, because it seems that my audience really likes crypto videos more than my day trading videos, guys. God bless you a ton, and I'll see you guys in the next one. Peace out. Let's get it.